Hello guys, today we will discuss about unconventional monetary policy tools. What is meant by unconventional? But because it means it is not a conventional. Conventional means repo rate, reverse repo rate, these kind of things. But it is unconventional. What are those? There are three such things. One is zero interest rate policy, another one is negative interest rate policy, another one is helicopter money. Okay. Now we will see the zero interest rate policy. Okay, it is followed in the USA from 2008. We know what happened in the 2008 financial crisis, global financial crisis. Okay, so under the zero interest rate policy, money injected into the economy in order to promote the growth. Okay, under this, in the USA, US Fed Bank, it is like a RBI for us, provided loans to the banks at almost 0.2% rate of interest. Okay, it is not zero rate of interest, it is a 0.25%. It is almost negligible. So what is the main idea behind this policy? It is the simple that they have to increase the rate of interest so that people will borrow the money. Automatically demand in the economy will increase, because due to global financial crisis, demand in the economy reduces, and then economy growth all of a sudden fallen down. So in order to counter it, they followed the zero interest rate policy in order to boost the demand in the economy. And this policy also called quantitative easing. Okay, and there is one more policy which is opposite to quantitative easing, that is called Fed tapering. Okay, we will discuss about it in the next class. uh, it is following right now, USA following the Fed tapering. What is mean by Fed tapering, we will discuss it in the next class. Okay, next one more policy, negative interest rate policy. It is generally followed in the developed economies such as Japan, Switzerland and Denmark. Okay, under this, firstly we need to understand what is the general scenario and then what is the happens in the negative interest rate policy. Generally, banks park their surplus money with the central bank. If the bank have any extra money, any surplus money, then they will put that money with the central bank and earn interest. When it follows, generally in the economy, in the market, interest rates are very less. That time banks, if they give loan to the people, they may not get proper interest. So at that time they will park the money with central bank. In India it is RBI, in USA it is a US Fed Bank. At that time they will park the money with the central bank and then they will earn the interest. However, under the negative interest rate policy, banks required to pay interest for parking money with the central bank. Okay, now you can understand by seeing the figure. Under the general scenario, this is the central bank, these are the banks. When the banks have surplus money, they will put that money with the central bank, and then for that money central bank pays the interest to the banks, so that they will earn the interest. But under the negative interest rate policy, if the banks have surplus money, and then they will have to keep the money with central bank because of the less interest rate in the market. For that, central bank will not pay any interest to the bank. In return, banks itself has to pay the interest for the parking money with the central bank. Okay, I hope you understand why it happens. What is the motto behind this policy? Simple. uh, Central bank wanted to provide the money to the people at cheaper rate of interest, so that these kind of banks will give the money to the people rather than keeping with the central bank, so that demand in the economy will increase. Okay, and next one more thing is, it is a helicopter money. It is just hypothetical concept. It is put forward by Milton Friedman. He is economist. Okay, under this, banks print the currency notes and distributing it to the people at free of cost. This concept we generally heard during the time of COVID-19. Many state chief ministers are asked for the opting helicopter money, but it is not happened in India. under this central bank, in India it is like RBI, has to print the currency note and distributing it to the people at free of cost. Okay, it is simple. What is the motto behind it? Increase in the demand in the economy during the recession time. Okay, now we will observe all three at one. Under the zero interest rate policy, negative interest rate policy, people get money at cheaper rates. Okay, not zero but at cheaper rates. It means debt liability of the people will increase. But under helicopter money, people get the money at free of cost. It is like a grant. They need not to pay any interest. But in the zero interest rate policy, negative interest rate policy, if the people get money from the banks, they have to pay the at least minimum interest rate. It may be less, but they have to pay the interest rate. But in under the helicopter money, they need not to pay the any interest because they get the money freely. It is like a grant. Okay, I hope you understand it. Thank you.